Among the Mag 7, I only like the Mag 2. The only two that I'm investing in right now are Nvidia and Amazon. I'm staying away from the others. There are some issues with the other names, and I do think that their valuations are too steep. But what always happens in technology is we will have some concern. It could be in weeks, it could be in months, it could be in quarters, and these stocks will fall. Just like they took a very heavy fall around July and August of this year when people were starting to worry that all these billions of dollars spent on AI infrastructure were not going to amount to anything in products. That will swing back. And when it does, we'll get a chance to buy some of these stocks. As I see the outlook for my sector for the entire 2025, I would be surprised if the S&P 500 does better than the tech sector. I think the tech sector will continue its outperformance in 2025.
Yeah, which is almost 25-30% of the S&P 500, 25% of the S&P.
Artificial intelligence, AI, has become incredibly prevalent in many facets of society in recent years. Companies in this sector are undoubtedly at the forefront of the next big thing in AI applications, capitalizing on this expansion. With a staggering 2,300% increase over the last 5 years, Nvidia has undoubtedly been the one to watch out for among the major companies, solidifying its place as one of the most impressive growth stories in the technology industry. Crucially, as the company rides the AI wave with processors for data centers and graphics, investors have been keen to profit from its success. With the booming need for GPUs, graphics processing units, which power AI models, the stock's 199% one-year return is evidence of its ongoing relevance in the artificial intelligence area. These days, they are essential to sectors including cloud computing, finance, and healthcare. Nvidia has positioned itself to be the primary provider for the graphics side of infrastructure, and its products are in great demand as businesses rush to incorporate AI into their operations. However, given that its stock is already trading at a respectable premium and close to all-time highs, it is unclear if Nvidia's stock advance is over or if there is still much more to go. As previously mentioned, Nvidia currently holds an 80% market share for its goods. It's quite a comfortable place to be. Many AI systems rely on Nvidia's graphics cards as its foundation, and as demand for AI technology grows, so does the requirement for these cards. There will probably be a scarcity of GPUs, particularly for gamers, according to a warning from digitaltrends.com. For Nvidia, this mismatch between supply and demand presents a special opportunity. This stock should hold up well as long as there is a growing need for AI and machine learning chips and supply is limited. The speed at which Nvidia's revenues exploded in fiscal 2024 as opposed to fiscal 2023 serves as a strong example of this. Businesses require their GPUs. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Paul, you made the point about Nvidia and Amazon being the two mags that you like. Do you not think that Nvidia would get caught in the crosshairs of US-China tensions? I mean, or also be caught up as it kind of expands and grows its base with the FTC on anti-competitiveness?
Yeah, so as it pertains to China, not because it was a very active diversification plan by NVIDIA's management, but we have in the last year gone from about a quarter of NVIDIA's sales exposed to China to about half that. And that probably drops further. The demand is so insatiable for their next gen Blackwell chip that they will be able to sell all the components that they make. Over time, I do think it's a problem because China is such a big and such an important market. I'd rather be friends or at least frenemies with them than the posture that we have. And it could get even worse as Trump takes office in a couple of weeks. So we'll see what happens. As far as the antitrust stuff goes, of course, Nvidia is being investigated currently over its acquisition several years ago of a company called Mellanox, which really allowed them to develop the data networking tools that they needed for their AI accelerator chips. I don't think that that will go too far. And I don't want to say it's not interesting, not important, but I don't think it's particularly a big driver, positive or negative for that particular company.
What you want in a growth stock is the company's latest statistics. Nvidia's most recent quarter saw a 94% increase in revenue year over year to $35.08 billion on a GAAP basis. Additionally, Nvidia's profits increased by 111% year over year to $0.78 per diluted share, or around $19.3 billion. Since earnings are the foundation of long-term stock success, I frequently place a lot of weight on them, and with good reason. Since the two long-term overlap, I am still concerned about Nvidia's profitability potential and total revenue growth potential. The chart below attests to this. In fact, Nvidia's stock price increased nearly in tandem with its GAAP earnings per share over the previous 5 years. But Nvidia's fourth quarter GAAP forecasts on margins, which the company expects to be 73%, were one of the main aspects of its third quarter results that I really liked. I enjoyed this business, which has a big profit margin. The quick response: no. To restate what I said earlier, AI is here to stay due to its unparalleled growth. There are numerous things at play here. Nvidia's third quarter press release includes announcements about new growth areas, such as the introduction of an AI aerial platform that has already started working with T-Mobile, Ericsson, and Nokia, the use of Nvidia computing in new Volvo SUVs, and the launch of a supercomputer in Denmark that runs on more than 1,500 Nvidia GPUs. These represent only a handful of the many locations where Nvidia's resources are being used. Analysts on Wall Street predict that Nvidia will end fiscal 2025 at $2.95 per share. Its forward P/E ratio would thus be 47.2 times its fiscal 2025 earnings. Now, a premium of 47 times earnings for Nvidia shares doesn't seem that extreme given the long-term potential and its current dominance within its space, particularly when you take into account that stocks like Tesla, which I adore, trade at around 100 times earnings, or Cava, which trades at over 300 times earnings. This business is far from finished. In actuality, Nvidia's best years are probably still to come. I advise not to be scared to purchase at the current price. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Assuming by that double figure, you're including sort of this agentic workforce, which we're just now trying to get our arms around, right?
Yeah, that's right. Thanks for having me, Carl. What's really interesting about the innovation that we're seeing with artificial intelligence, particularly over the next 12 months, is that we're going to start moving from a world where we have to prompt and ask questions and get answers from our AI assistants to AI systems that are able to complete tasks on our behalf and that respond to objectives, not just questions. And so with an agentic system, you'll be able to ask an assistant for help, and that assistant will go ahead and create a to-do list based on your objective. And that could be an objective, something like, hey, go book me a flight, or I've got $100, turn it into $1,000. And the agentic system will be able to take a look at that problem, understand it, and be able to weave in all the tools that it needs to be able to create a to-do list, and then systematically work through that to-do list to complete the objective. So that really opens up what artificial intelligence systems are capable of, and we're right on the cusp, right on the early days of seeing these agentic systems really flourish. Some of the early ones are very, very promising, but it's very, very early.
Due to its leadership in the artificial intelligence, AI, revolution, chip designer Nvidia has gained widespread recognition in the past 2 years. The graphics processing unit, GPU. A special piece of hardware is the company's mainstay. GPUs are essentially the engine that drives the entire AI vehicle. To use a metaphor, the primary driver of Nvidia's quick rise to become one of the most valuable companies in the world has been its extensive range of GPUs. Over the past few quarters, Nvidia has consistently produced billions in profits and free cash flow because to this increased growth. The business is poised for its next significant opportunity and has been making unrelenting investments in improved research and development, R&D projects. Naturally, I'm referring about Blackwell, Nvidia's eagerly anticipated next-generation GPU architecture. Let's examine the reasons why Nvidia's 2025 Blackwell launch is so significant. Additionally, I'll be revealing another Nvidia asset that isn't getting much attention right now. This other product may eventually surpass Blackwell in market share. It is anticipated that Blackwell will provide a wide range of additional features and capabilities targeted at training and inferencing data demands for increasingly complex generative AI applications. The emergence of large language models, LLM, is one of the most significant outcomes of the AI movement in recent years. Microsoft, Amazon, Alphabet, and Meta platforms have all built or invested in proprietary LMs. Each of these Magnificent Seven members also uses Nvidia's GPUs and data center services extensively, making them all customers of the company. In light of this, it is hardly surprising that big tech jumped to the top of the Blackwell purchase order coup. Demand is so great, in fact, that Blackwell is said to be sold out for the upcoming year. According to research experts at Piper Sandler and Morgan Stanley, Blackwell's fourth quarter sales could drop by anywhere from $5 billion to $8 billion. At the upper end of this estimate, it would account for 45% of Nvidia's total sales from networking and computing devices in the company's fiscal fourth quarter last year, and it comes from a single product. Although it's obvious that Blackwell is significant, I believe Nvidia has another project in the works that merits a little more focus. I/OFund CEO Beth Kindig is one of the most knowledgeable tech media figures. Rubin, the Blackwell replacement, is reportedly 6 months ahead of schedule, with a rollout as early as the first half of 2026, according to a post made by Kindig on X a few days ago. Yes, exactly. Nvidia is already developing a product to replace Blackwell. The introduction of the Rubin architecture is likely to be a huge success if the demand themes discussed above are any guide to what Nvidia may have in store. Dan Ives, a research analyst at Wedbush Securities, has predicted that within the next 3 years, investments in AI infrastructure would surpass $1 trillion. Given Blackwell and now Rubin, I believe it's reasonable to argue that Nvidia is in a strong position to gain market share. I am delighted that the timing is ahead of schedule for the time being, even if anything could happen during Rubin's production or quality assurance procedures. In addition to re-accelerating top-line growth and profit margins, Blackwell and Rubin's combination may help further distance Nvidia from a fiercely competitive market. Even if competitors like Advanced Micro Devices and even some of Nvidia's own clients are becoming more competitive, I believe Nvidia is setting the stage for long-term success. Because of the company's ongoing investments in strategic innovation, I continue to believe that Nvidia will be one of the pillars supporting the AI narrative in the long run. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.